In this presentation, we will take a look at examples of recording transactions related to encumbrances. Encumbrances is going to be a new term when we move from financial accounting to governmental accounting. In other words, we do not typically record encumbrances with relation to financial accounting as we will record encumbrances to the general ledger for governmental accounting. An encumbrance is the name given to funds that have been reserved when a purchase requisition is finalized and encumbered. In other words, we can compare the encumbrance to something like a purchase order for financial accounting. When we consider a purchase order for financial accounting, it's one of those strange type of documents that don't actually get recorded typically for financial accounting. In essence, we're going to record that type of transaction here for governmental accounting in order to record on the general ledger the reservation of these funds. For financial accounting, we'll fill out the purchase order, we'll track the purchase order, we'll fill it out within, say, accounting software on the purchase order, but we don't typically see any transaction for it because we haven't received, say, inventory or any services at that point in time that we filled out the purchase order, and we haven't paid for the purchase order, and therefore there would be nothing for us to record in terms of normal accrual accounting. However, here we want to record the reservation of those funds. Therefore, we're going to have this account. This account's going to be called encumbrances. Here's going to be our example. We have purchase order and contracts issued. This is going to be the grouping. We have the general government, the public safety, the public works, health and welfare, and miscellaneous. And we want to record this information. It's not going to be an expense item yet, because again, we haven't incurred the expense at this point in time and we haven't paid for it. So typically under accrual accounting, we wouldn't have anything to record. We want to record it here though, therefore we're going to have this account called encumbrances. Now it's important to note when we consider encumbrances, we have a lot of different accounts down here that are below the equity section at this point in time. We recorded prior to this in a prior example, estimated accounts, things like estimated revenues and appropriations. Those are budgetary type accounts that we have that have now been recorded. Encumbrances is not a budgetary account, so make sure that you have those things distinct. It's not a budgetary account, and it's also not what we would consider as a normal income statement account, which in this case would include revenues and expenditures because we're on a modified accrual basis. They're also not included in revenue and expenditures. Encumbrances are just going to be that holding account. They're going to be holding on to the commitment that we actually want to see transparently on the general ledger. And then they're going to be reversed entirely when the transaction would normally be recorded on a more of a cash basis or accrual basis. So in other words, I would think of it as a clearing account as opposed to a temporary account. It's going to start at zero, it's going to go up, and then it's going to go back down to zero based on when it should be cleared out, based on when the actual expenditure is incurred, not based on, like a temporary account, when we close out the accounts, all of the income statement accounts, say to equity type accounts for a for-profit organization, or the net assets minus liabilities for a governmental type of organization. So it's an unusual, different type of account that we see down here on the income statement side. The transaction is going to be a debit to the encumbrances, and we're going to use the one line item again. We're not breaking it out into the different categories. We're recording a debit of encumbrances. This will be different for the governmental accounting, for the modified accrual. Where's the credit going to go if we're just going to post this new account that's not typically there for normal accrual or cash accounting? Well, the credit's going to go somewhere where we typically put things when we don't know where else to put the other side, into an equity section. So again, now we've made another equity account. It's just called encumbrances outstanding. So when we record this, we're going to have a debit to encumbrances. Encumbrances is going to increase. It looks like an expense, but again, it's not a budgetary account and it's not revenue minus expenses. It's going to be this other holding account. And the other side of it's going to go into an equity type account that would be similar to an equity account for a for-profit organization, the assets minus liabilities type of section. And note, those are just going to be equal and opposite. So they're always just going to be equal and opposite. And then once the expenditure happens, later on, once the normal process that would normally happen under a cash or accrual basis to trigger when the expense would be recorded, before we record that expense, we will reverse the encumbrance related to it, and then we'll record the expense as we normally would. So we'll reverse this, then record the normal type of expense. Note that in the subsidiary ledger, we'll then break out the detail of the encumbrances. We put that in the encumbrances in one line item. We'll then say in the subsidiary type ledger, which will typically include encumbrances, expenditures, and appropriations in one subsidiary type of ledger, and therefore look fairly intimidating. In the encumbrances section, for this example, we see the detail now being broken out, the detail or the total of the subsidiary ledger then matching what is on the encumbrances in the GL and the trial balance. We'll see more about the encumbrances and how they relate to other types of accounts and other types of transactions as we move forward, as well as more of this subsidiary ledger in future presentations.